It seems like it's been a little too long since I actually made a true, honest to God, bona fide stock pick. It seems I've been recently obsessed with options, especially going around saying, oh, look at implied volatility right now. We should really be looking at implied volatility. I'm going to go back to basics after kind of being humbled by Marriott today. Even though I didn't post that big of a loss compared to what it could have been, about half of my maximum loss, and a pretty low absolute loss, only about 70 bucks. I'm gonna rethink options for just a little while. So, LNCR. We have right now, actually, do the normal thing, go out to a long-term chart, see what we got. We could maybe draw a trend line there. That was broken around June. We can do that. We can maybe make that a channel, draw a trend line on top of it. Yeah, sure, that works. But I'm going to take that one out anyway. We could do it, but it's not going to prove too useful for us. Okay, so we have the 2-year. We can actually look at the weekly chart. What do we have for the weekly chart? Stochastic buy signal. The relative strength index gives us nothing. The money flow index is saying that money's flowing in the stock. That's good. We can also take a look at the, how I like using the short-term momentum, just the simple five period. Also really gives us nothing. So we can now zoom into the next time period. Okay, what do we have now? We still have this trend line holding. We have this red line here representing the 50-day moving average. We have this blue line here representing the 200-day moving average. So what can we do? We can draw a trend line from maybe the bottom of here and connect up to there, which puts us close to today's closing price. We can draw that trend line at the top, and these wicks here, and you can ask Mike, my partner, when these things happen, it usually means like, look, that was a complete rejection of the price. Like, even, watch this, I'll go to the 2-minute chart. That was one trade, so we should disregard it. This right here, that lasted all of, let's see, 1, 2, 3, 4. That lasted all of about 12 minutes. I'm disregarding that. It's not worth even considering. 12 minutes of trading time should not impact our decisions that are trying to predict stock movement for the next few months. Okay, so what do we have here? Ascending triangle. Yes. Zoom in. Actually, we'll take a look at the indicators. That's usually good idea. Okay, first we have a stochastic sell right here. Okay? It happened yesterday. So we have a sell signal there. In the relative strength index, and I'll clear up things as I go. In the relative strength index, which is this one that I'm dragging up right now, we can see if we have any signals in that. And I think we actually do. And this might actually be kind of ironic. We draw a trend line here. It was broken right in this area with that little circle. And on the top, we have an ascending triangle that actually broke down in the relative strength index. That's bearish. And we had a sell signal in the stochastic. That's bearish. Next, the money flow index. See if we have any answers in this one. Right now I can't really see anything. It just looks random to me, so I'm going to pretty much disregard that. It's pretty much in line with the stock movement, so no divergence, none of that, so get rid of that one. And then finally, the very short-term momentum that I like to use, and we have, draw the line from here, across there, and we have a pretty large symmetrical triangle breakdown in the very short-term trend. Like, see, right there. And that happened, yep, that happened just today. So we have 3 momentum sell signals, but we still have an ascending triangle, which according to the Bukowski studies through the first decade of the millennium, that gives us a 70% chance of this pattern breaking to the upside. So only a 30% chance that it breaks to the downside. But if it does break to the downside, in fact, that gives us a 68% chance that it's going to meet its price target. So what's its price target? And I'm going to assume right now that we're going to probably make this a bearish trade in the end. Why? I'm looking at its earnings off of the dailyfinance.com, which, no, it's just dailyfinance.com. Excellent for getting earnings and dividends history. Take a look. Earnings growth, it's there. But there have been times in the past that it has been much better. And those times in the past, the actual price of the stock was much higher. So there's something going on here. The earnings, I'm not quite convinced. So we have ascending triangle here. We do our measuring stick rule. Height of the pattern projected across the breakout point. Earnings is tomorrow. Or, no, it's actually, yeah, next week. My bad. Next week, so we'll assume that the breakout will happen then. If it does break out with bad earnings, our target is around 26.50. We can actually probably round that to a close support point. So our first target is 27.50. Our second target, adjusting for the dividend, which was paid yesterday, will be about, yep, 26.50. So we're going to say 26.50 for right now. And I'll write that in the chart. Target 26.50, which makes our reward. Actually, first we should get our entry price. Entry price, we will enter with a stop order if the price breaks below $28.50. So $28.50 is our entry. And we're short selling. So we have a $2 reward. So reward equals, we have a 68% chance, according to the studies, of $2 per share. Our risk will be, since we're entering at 28.50, we want to keep our risk reward ratios nice and large, keep everything tight. We're going to the 30-day chart now, to the 2-hour chart, just so we can get an idea of what support and resistance levels there are. And from the looks of it, exit if the stock closes above 29.25. And I think that, yeah, that's pretty close to the 50-day moving average. So it's your choice. You can exit if it closes above the 50-day moving average at 29.50. You'll have to take more risk though, or 29.25. So exit at 29.25 for a loss, which makes our risk equal to 75 cents. And we have a 32% chance, which is just 100% minus 68% chance of success gives us the 32% chance of failure, right? So now we calculate our probability adjusted risk to reward. And how we do that, we take our reward, which is $2, times our chance of success, 68% chance, $2, We multiply that, and then we divide it by the product, which is just this times this. We divide it by 75 cents, which is our risk, times 32%, which is our risk of failure, which gives us this right here, the equation of $1.36 over 24, and do the math for that. And our risk to reward is 5.67, which it's okay. It's certainly worth taking the trade with that probability adjusted risk to reward, but it could be better. So on that note, I would not enter the trade. Either enter it earlier, so like at 28.75, or enter it at or don't exit at the 50-day moving average. So actually, for this trade, I might actually move my entry point up at 28.75, depending on what's going on. So risk to reward is equal to 5.67, which is reasonable. All depends on your own risk tolerance. So that's what we're going to do. Hopefully make some money on this. Like I said, with all of our momentum indicators right now, the stochastic has a sell, the relative strength index has a sell, and the momentum index has a sell. We're already getting some leading sell signals. So I'm expecting earnings, which is on the 18th, which is next Monday. I expect it to be pretty bad. All right, thanks for watching. If you have any questions, post in the comments.